Hello, my name is Chad Hart. I'm an extension economist with Iowa State University. I'd like to share with you an update as USDA released some new numbers here in mid October as we're looking at the corn and soybean harvest rolling in. And so, as we're looking at the numbers, we've got to remember that, right now we're sort of in the middle of harvest. We've got roughly half the soybeans already in, about a third of the corn is already in. And I'd say the general statement that I hear about the crops are that things are looking on average a little better than we expected, but we are seeing a lot of variability out there in terms of the yields because of let's face it, the wide array of weather conditions that we saw through this drought, especially here across the Corn Belt. And so as USDA looked at the numbers they were seeing here for the 2023 crop, they ended up reducing that yield down a little bit more. They ended up dropping it down to a flat 173 bushel per acre average across the nation. So that puts us now slightly below last year in terms of yield, but because of the increased acreage we saw this year, we're still talking about a much larger crop overall, still weighing in at about 15 billion bushels. Now, as USDA's brought that production number down just a little bit, the markets were actually buoyed by the reports because the adjustments on the usage side were small as well and were matching what we saw on the production side. So they did end up pulling back a little bit on corn usage as we look out into 2023. And probably the biggest adjustment that I want to key on is in the export line. As we're looking there, USDA is still expecting to see a fairly sizable jump in exports this year compared to last year, but they did whittle that down by about 25 million bushels as we look month over month. So we are still challenged when it comes to the international markets right now, but USDA is still holding out hope that we could see a rebound there, at least for corn exports. And so when it's all said and done, we are still seeing ending stocks growing above 2 billion bushels as we look out towards next August. But we are seeing that number get closer and closer to that 2 billion bushel mark, and hopefully maybe it gets to slide below that as we move through the year. Now, in terms of pricing, USDA did bump up their season average price estimate for the 2023 crop by 5 cents to $4.95 a bushel. As we look at the soybean crops, sort of similar adjustments here. Again, they brought that yield number down. In this case, they put us on par with what we averaged last year at 49.6 bushels per acre nationwide average. That brings us in at roughly 4.1 billion bushels worth of supply. So in this case, the crop's a little smaller than what we had to work with last year. And again, that's because the acreage dropped as we're looking here. So with the smaller crop, one would expect USDA does have to adjust that usage down as well, and they did. In this case, they actually ended up making two moves, and they were in the opposite directions. What they ended up doing was adding 10 million bushels to the soybean crush, so we continue to see more soybeans being used domestically, especially for biofuels. But at the same time, too, they ended up taking the export number down by 35 million bushels. So we continue to see that erosion on the international demand side. When it was all said and done, actually, USDA came out with the same ending stocks level that they had coming out of the September report, staring at 220 million bushels there. So it's still an incredibly tight stocks number, and that led to support of holding that USDA season average price at $12.90 a bushel. Now, with October, we being the second month that USDA goes out and actually inspects the crops in the fields, what we found is the general pattern of what they've seen over the past 5 years still holds. That basically each month they go out there, we tend to see the number of ears they count go down a little bit. And we also tend to see that yield move down a little bit as well. And that's exactly what USDA's objective corn yield data shows us here. And so when we're looking at the statewide estimates, what we saw them was make slight adjustments sort of across the nation, took out a little more yield in the center of the corn belt, but ended up adding a few bushels outside the traditional heart of the corn belt. Here in Iowa, they ended up knocking us down a bushel from 200 to 199. So again, just like the US total, slightly below last year, we're looking at the same thing here within the state of Iowa. Now, as we look at soybean data, the idea is again, the data seems to bear out what USDA tends to find as they look at each month throughout the fall. They tend to find more pods each time they go out there and look, but they do tend to see the yield drop a little bit from those pods. And so we found that data here as well as you're looking at the pod numbers in the October report, we're a little bit higher than what we saw in September, but the yields being estimated from those pods dropping just ever so slightly. And so when we look at the statewide numbers there again, the idea is that we tend to see lower numbers here within the heart of the Corn Belt, although we've still got some record yields being projected out there for Indiana and Ohio. Here in Iowa, they left the yield number alone. They put us at 58 bushels per acre last month, and we stayed there again this month. So the crops did get a little smaller, but we also saw USDA whittle down on the export numbers. And when we look at our export sales, at least so far, and we're about 5 weeks into the marketing year now, we have seen our soybean sales dragging well behind the last couple of years and the 5 year average pace we tend to see for our international sales. Now, by the time it's said and done, USDA says that the gap we're seeing right now will likely be the gap we see at the end of the year, that we're going to end up 2 to 300 million bushels below that 5 year average. And so they're not expecting us to really make up a lot of ground in terms of our soybean export sales. But one of the keys to watch here will be China over the next few weeks, as we have seen China starting to make a few more substantial purchases when it comes to not only the feed grains, but also here in the oil seed markets. Now, when we're looking at corn exports, last couple of weeks have provided a little bit of optimism, if you will, that maybe we can catch back up to the 5 year average. We are running a little bit ahead of last year, and a lot of that support has been coming from Mexico early on. But again, we've watched China start to nibble into this market as well. And so the hope is as we get towards the end of the year, right now, USDA would estimate us ending up just below our 5 year average, gaining a little bit as we move through time. But the idea is right now, that's the hope, is that we have driven these prices down low enough that we can reinvigorate some export sales. And when we look at where prices are sitting right now, in the futures market, after they incorporated these October reports, they did rise a little bit right after the reports. We saw some profit taking this last Friday, but the idea is what we see now is pricing holding in at around the $5 range. In fact, as we look at new crop futures out here right now, most of them are over $5 with the exception of December. And even as we look out towards 2024, we see those prices trying to hold in this lower $5 range as the market is, I think, expecting a fewer corn acres as we look out towards next spring, helping bring the corn market back into a little bit better balance. But it's also expecting that acreage to move from corn to soybeans, and that's why we see, especially as we look out towards 2024 crop, new crop beans, we do see that drop off there between the September and the November futures out there, reflecting that's when they're expecting the acreage to come in next spring, which will impact production next fall. But we've got pricing right now on 2023 soybeans trying to maintain at that $13 range as we're looking out there, and which translates back to roughly a 12.70 cash price. So right now the futures markets are a little bit more pessimistic about our export potential than what USDA is showing here, but they're not showing a great deal of a gap, if you will. They've been holding in there fairly steady. But as we look out towards 2024, they're bringing that price closer, much closer to 12.50 on the future side, which would point to 12.20 as we're looking on the cash side for 2024, which would be very close to our production cost estimates for the 2023 crop. And it sort of reflects to me that these prices are trying to basically settle back down towards those break-even production cost levels. But that's what we found as we looked at the markets. After this past WASDE report, again, USDA will provide another update on these numbers at middle of November, With that, we would expect to really see the yield numbers tightened in to be very close to what we'd expect for a final number, especially given the speed at which this crop matured. So I would expect that to be a very strong production estimate as we get towards next month. And then the other thing I'll be watching is to see how USDA updates those usage categories, and especially that export demand. While our prices have come down, we have seen some strengthening of the dollar here, especially over the last couple of months. That is likely still putting a cap on how much of a gain we might see from international sales. But hopefully, again, as we roll through harvest, we may see those export sales begin to sort of chug up and hopefully catch on to what we see as an average pace for export sales. Well, with that, that's my summary of what we're seeing in the crop markets right now. Again, my name is Chad Hart. I'm an agricultural economist for Iowa State University. Thank you for your time.